It is time for our ETF Friday segment. VanEck's Rare Earth Metals ETF has been thrust into the spotlight on speculation China will place tariffs on these metals. Here to discuss is James Seyffart, Bloomberg Intelligence ETF analyst. So let's get a little background on Rare Earth Metals. What are they? Why do we care?
Yeah, so I actually saw Guy talk about this yesterday on Battle of the Charts, but essentially rare earth metals, there's 17 elements. I can't pronounce half of them, but they're used in tons of stuff. They have dozens of use cases, from healthcare to consumer electronics like cell phones, nuclear energy production, and national defense, so they're pretty important. And the main thing here is that China owns conservatively over 90% of the production worldwide, so they dominate this market. So this is a big chip for them to play if they want to put tariffs on this.
Give us an idea of some of the rare earths and metals that are in this VanEck ETF.
Yeah, so actually that's a common misconception. A lot of people think they hold the actual metals, but what they really hold are equities or stocks of companies that are involved in production, miners, chemical companies, things like that. So what we'd like to do in BI is we try to dive in and figure out exactly what's going on in this ETF. And one of the ways we do that is something called a BI thematic capture score. And we try to say how accurate is this ETF at producing what it's saying it's producing. So the first way is how unique is the exposure, and the second way, how much is the revenue coming from that theme. So exposure, highly unique, 20 concentrated stocks. But when it comes to revenue from rare earths, only about 20% of the revenue comes from rare earth metals production, with only 2 of the 20 companies really getting rare earths as their primary revenue source. But the name of the ETF is actually Rare Earth Strategic Metals. So what we did is we looked at what the USGS calls the critical metals list, critical minerals list, and it looks at these metals and minerals that are critical to national defense or the economy. And when you look at that, it includes lithium, cobalt, and expanding to that, the ETF is very good at providing exposure to that, but not necessarily the best at rare earths, but the best we have.
Now, the ETF, whose ticker is REMX, it's down 44% year over year, up 7% this year, though.
Yeah, so we saw a huge spike, which is what Guy spoke about yesterday, but the main thing we saw was volume. We saw a huge spike in volume. It traded over 44 times what it normally trades. The other thing is it took in like $60–70 million over the past few days, so a lot of people are trading this. Traders are just looking for a way to play these news headlines, these tweets that we're seeing. But the key thing that we noticed, aside from that, is the premium and discount, aka like how much did the price move away from the underlying value of the holdings? And in this case, it closed 5.5% above what the underlying value of the assets were. And this happens for 2 reasons. 1, the volume in the underlying isn't that great, but 2, they don't trade at the same time the US market does.